The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a gorgeous but windy and cold day at the headquarters of Technical Trading and Investing, TFNN.com, our home base here in Clearwater, Florida. Windy and cold. Boy, it's in the high 60s. And boy, I saw the people out there with the parkas and the sled dogs getting ready for it. Just a very tough day on the people down here. We don't know how to handle anything about 72. The big coats come out and the sled dogs are hooked up, but what can we do? Anyway, it's another tough day, but we'll soldier through here, and we'll try to figure out what's going on in the market. We are up a bit on the S&P on extremely light volume. Just wanted to check in here. I'm going to update it right here. Yep, we're up 9 points on the S&P cash, 1561 on 1.8 billion shares. Normally we come in here like to see 2.2, 2.4 billion, kind of at a minimum to think that we're going to have an average or normal day. 1.8 is extremely light. We had a few things come out today. Consumer confidence numbers were way off. We also had new home sales way off, and they blinked for about half a second and said, bye, 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 bye. And that was pretty much it. And they did buy, and they're just not buying much of it, whatever it's up here. Everybody is looking at these highs and saying, probably time that we should have a long time ago started to take some profits off the table. As we watch this market, we'll have to figure out. I've got a couple of positions. No shorts on the indexes until I see a close below a 1548. But we could get a reversal fairly quick if we get any more bad news out of Europe. Just kind of interesting to see how that is playing out now. What I want to look at up here. I mean, we've got the dollar index up 8 cents, but it seems to be that everybody's just out trying to get that last penny before the market turns, and probably not a lot of them to be had out here. We're going to go through some of the stocks that are moving, and probably the one that has caught my eye so far today has been Molycorp. If you listen to my show from the earliest days when I was broadcasting from up north on the phone, you would have probably heard me talk about Molycorp. The symbol is MCP. It came along, and there was probably there's a few times that you're going to be up to the plate, and the best pitcher in the world is going to give you a nice, easy, soft one, and you're going to be able to slow down time and see the stitches of the fastball, and know that you can put that thing right over the wall. What we had a few years ago when Molycorp was basically IPOing was China had 95 of all rare earth minerals for export. If you did not come to their country and basically let them steal all your intellectual property, they weren't going to give you any of those wonderful rare earth minerals to make your products. And government in a big hurry decided to fire up a mine in California that had been closed 10 years previously. Before the current crop of a lot of rare earth minerals, this mine was used to get the different rare earth minerals that basically made the red, green, and blue on the screens of your television sets. But rare earths are not all that rare. What they are is a very small percentage of the dirt or earth. If you can find a mine that has 5% of the dirt or earth with rare earths, it is rather interesting. Now, what has happened, a few things. One, China started saying that they were going to reduce their exports even more. Molycorp took off like a rocket, and I bought it a few days after it went public. I started seeing problems in the mid-40s with the stock. Let me go back here. This can't be right. Is that it? That's it, 14 bucks. Just wanted to make sure, 2010. So let's go back 3 years. Is that right? Okay, there we go. Just wanted to look at it. Started off around the 12s or 13s. I bought it in the mid-14s and sold it in the high to mid-40s. And it had one more run after that, but I was thinking if I was getting awful greedy in the upper 40s. It had one more blow-off top that I did miss up to 80 bucks, and then started coming down. What happened as rare earths became so rare, the Chinese individuals that had a lot of the rare earth companies were backdooring it across the border and smuggling it out and doing everything they could in the world to sell the rare earth chemicals. At the same time, everybody saw this thing happening all over the world. They opened up 2 more mines in Australia. There were some other mines. Now, what has happened in the last day or so is the Japanese have come out. They know that they're a landlocked country without many assets, and certainly not a lot of places they can dig to get oil or rare earth minerals or anything. They're looking out and around in the ocean. So they've gone over to some of the islands that are fairly close to them, and they're working out how to dig for things like methane gas trapped in ice crystals. What they announced yesterday that has pretty much put the kibosh right now, and I don't know if it is true or not. I do know that that I think it is putting more problems on Molycorp, is that they say that they found a place that they can mine about 5 feet under the surface of the ocean floor at about 500 feet. That is, like I said, most mines are about 5%. They're saying that they'll find concentrations in the neighborhood of 20%. While you would still need to get some of these rare earths worked on, you could make a big ship out there that would suck the goop up off the bottom of the ocean, and at 20%, you don't have to reclaim a lot to actually get it. But kind of finding new lows out here in Molycorp. I was hoping this thing would come in on lighter volume. It is not. It is going to be breaking below, and one of our previous hosts on TFNN always said the best price for a low price is the low price, and the best cure for a high price is a high price. That's exactly what we had. Now everybody and their dog is looking to drill in anything, if it's a house cat or a rabbit or up on the Arctic Circle, whatever it takes to get this stuff, because you can make a lot of money if you sell it. Well, we've got the Japanese throwing a little bit more cold water on the idea that rare earths are truly rare. The question is what kind of rare earths they're going to find in there. I think some of this is just a little bit more on there. Anytime you do anything on land, it's got to be easier. Is Molycorp probably going away? The answer is no. We need a source for the military that cannot be shut off, and it'll probably still be around. A little disappointed out here. I thought we might finally find this thing bottoming out, but volume is still too high. We are going to be breaking that last low with volume, and let's see if I can get out here. We actually kind of came below it and popped up above it with some light volume, and I thought maybe this would be one of the better buys out here. The energy, when you actually look at my power law vector indicator, the volume and energy from 1444 down to 575 was really huge. We've got almost that same kind of energy on this last leg down. So it's going to be a while before this thing is going to be a buy. But probably finding a lot of people still shorting stocks like this. Keep an eye on this thing. If it could base out maybe a couple more times out here, we might finally find a bottom in this. It takes patience in these. But especially when they blow off the top like this, these things can take 3, 6, 9 months, a year, 2 years to base out. But as long as it continues to be able to make a small profit and eke it out, all it would take was one shot between Japan and China, and maybe Russia and China, and maybe Russia and everybody else, or the Afghans, or the Mongols, or anybody else start some trouble over there and cut the supply of rare earth minerals would be a big issue. But I've been tracking this one, and looks like it's going to take a while longer. Right now, if you looked at this thing, I'm thinking that we might be looking at a $3.50 price tag on this thing before it finishes up. But the financials came out the 21st, and it's still problematic. Let's see, was it RE? Is that what it is? No, I'm trying to remember what it was. Well, I'll think of it in a moment. Other stocks I wanted to look at out here was ARMS Holdings. We've talked about this one, and I think the CEO is resigning, and it's going to be fairly soon. I suspect that he's wanting to get out at the top and be able to sell his stock, and I think we're pretty close to that. I forget who's actually taking over, but I don't think it matters a lot. Everybody and their dogs now coming after ARMS Holdings business. We're seeing Intel, Qualcomm, NVIDIA. All these folks are making low-end chips for cell phones and tablets, and it won't be anything new. We have a caller, and it is Janice. And he spelled it just like he spelled it last time, Janice. How you doing today?
Good. How are you?
Pretty good.
I'm looking at Intuitive Surgical.
Yep.
And I don't have a position. At first, I was looking at it on the short side because of the high volume where it had come down.
Down, yep.
And it looks to me like it keeps holding at about 475.88.
Yep.
So I'm not really sure which way. I don't know if I've changed my thesis or it just seems to be bouncing off that line there.
This is all about a news-driven stock. I don't know if you paid attention to the news. Mm-hmm. But basically, there is a... well, let me put it this way. The government's running around sending surveys under some of the auspices of the government. Well, hang on just a second. We'll be back in a minute. But
okay.
This thing's a news-driven stock, and I want to get into how you're going to have to trade this thing and what you're going to have to watch for. We'll be back in just a minute with Janice from Pennsylvania. I guess it's a number 2 pencil, but he actually came in looking like a guy out of Dance Fever or something today. We'll have to talk about that.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
As we come back, we're on the line with Janice from Pennsylvania. We've got our engineer Steve in there dressed like Denny Terrio from Dance Fever. So we've got quite the thing going on today. We're talking about Intuitive Surgical, and we've got a highly news-driven stock here. The government came out with a survey, and that survey was trying to find out when it was being used, how much it was being used. They make these little robotic surgery devices that are about $1.5 million a piece. And the whole Obamacare thing now, the Congressional Budget Office came out about 4 weeks ago, said that premiums would be somewhere between 30 and 100% more expensive than they were last year to make it work. And so there's a lot of people looking for ways to cut costs in Medicare, and one of the things were these surveys, and they think that the idea is that when Obamacare takes effect in January of 2014, not even a year away from now, that they're going to be looking at ways of cutting and not spending for things like this device at $1.5 million. So the question is, do you believe that normally when you get that, I'm from the government and I'm here to help you, it never works out good, and that's why everybody bailed on this thing. The first day they thought it was a fraud investigation. Then it bounced on not being a fraud investigation. Then they started understanding exactly what was going on, which is the government's trying to get out of putting this on the Medicare and on Obamacare, both. And well, you're just looking for this thing to bounce and get short?
Yeah, that's you know, I'm seeing it keeps bouncing.
Yeah.
Basically, and so I'm not sure if it's even a safe thing to play because of the way it's moving.
That's the problem is it is going to be news driven, and it's going to be what happens with these surveys, how much they're willing to be cut back. You know, technically I'd like to see this thing at about 540 to get short. So I think that there's a lot of room to the upside to get short. Could you go short today and it make an ABC down? Yeah, because it's all news driven right now, but it's all about future sales of this device, and you know, you know, whether or not the government decides to buy it, it's going to be kind of an all or nothing thing. I tend to stay away from biotechs because you never know what's going to happen in the approval process of the drugs, and it's kind of an all or nothing. And I think this thing, you know, you pretty much knew what it was and what it did. And the whole idea of this thing, trading it, is going to be based on news. I'm just trying to see if there's anything else I can get at here. I mean, you've got a higher volume low, you've got everything that's set on this, and you've got the, at least the notion that this is at least one of the things that are looking at cutting going into next year.
Right.
And you know that there's tremendous pressure. Even the Aetna guy came out last week and said his premiums are going to be going up 30 to 100% next year. And he says that you guys are going to be shocked at what happens when you wake up and understand just how much premiums are going up next year.
Right, right.
And so I think you're in the right ballpark out here. I'm just thinking that this thing, you know, you had a good kind of short signal. You didn't get the test of that high at 595. Or excuse me, 594.89, and I would have loved to had a good test and start looking for this thing. But I mean, the volume was so low up here. You know, it was basically 30%. $9 lower.
Right.
So I think you just have to say, like you said, came down on monstrous volume. You'd love it to get back into the candle. It kind of did for about half a second on the 21st.
Right, right.
And then it's pulled back down here. I think, you know, it's going to be a lot on what happens in this market. Were you thinking anything else? I love that gap at 540 because it's halfway in that giant candle. You get back in there, find some massive resistance, and the volume is light. That's where I'd want to be. But I don't see any other places that really look like the risk-reward actually is that great.
Right. I don't think I would do anything here, to be honest with you. I think there's too much of it. You know, it could shoot right up again also.
It's all headline risk is the problem with this stock, and that's why, you know, a lot of times I try to stay away from these when I know that they're totally news-driven. Or a lot of times you can buy them at the lows if you know the news is phony. And, you know, if you liked it long. I just don't see... I don't see a lot in this thing. It's a tough trade. I think you're doing this right thing until this thing gets up a little bit and you see one more signal. But I'd be waiting for 540 to even think about a short play on this.
All right. Thank you, David.
Thank you.
Have a good afternoon.
You too. And Janice from Pennsylvania. We'll be back in just a minute. Give a call to Steve and ask him why he's can't even get it out of my mouth.
Recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And we got 1561 on the S&P cash. Still less than 2 billion shares, although just a hair underneath that. This is extremely light trading, and I suspect that we're going to have a massive market move in the next few days. And with the volume, it would suggest to the downside. We continually have less volume up, and we have less volume down. And you don't want to see very light volumes as you hit highs. We're only about 5 points away from that. Again, I'm waiting for at least a close below 1548 to decide that we've put a top in. And I know it's tough and frustrating, but I would be extremely scared to be long into these very light volume thrusts up. And I could see where you may not want to go short, but I think like Mr. Miyagi in Karate Kid, he says, best way to avoid fight is not be there. And right now, I've got a couple of positions that I think are probably going to do okay for me, but no index positions. And I think we're going to be steering clear on that until there's a clear direction out of here. The downside of trading in volumes this light is that you get some kind of giant headline risk out here. And I think one of the headline risks that is a good possibility are a run on the banks in Cyprus and in some other countries that you hadn't thought of that are also having problems with in the Euro zone. And I think what they've done there has been a big indication that you probably ought to take your money and put it in probably put it in your mattress. And I think we're probably going to start seeing that more and more in the minor countries of the Eurozone land. But very light volume out here. You have to be extremely wary. If we were waiting for some big bit of news like the Fed to come out, it'd be something else. But not being able to crack 2 billion shares at 2:30 Eastern Time in the afternoon is a huge warning signal. Be wary for a fast-moving market. Now, could we bust out of here and have giant volume tomorrow and signal a breakout? Possibility is there. That's why I'm not short today on the indexes. But it would be rare to see these highs pushed on such a light volume, only to see these things break out. Maybe we break out for a day or something and pull back in, and that's our signal. Again, I might... if we have a nice intraday reversal yet again and actually start seeing all the volume come back into this market. Right now, from the stocks I'm looking at, from looking at the summation index, I continue to suspect that we are having broad distribution at these highs. The way the markets make a high is fewer and fewer stocks participate. Normally you see the weakest market in the, I want to say like the S&P, and then in the NASDAQ, which has basically failed to even cooperate and really pull itself up to the levels of the S&P. And lastly, you see the Dow with its measly 30 stocks, 95% institutionally owned, actually do anything. That's why I don't look at the Dow. It's almost always a head fake. But normally when the highs come in, you get those last 30 stocks where all the money's going, and that's it. So anyway, we were looking at some of the other stocks that were moving here. Let me get back to these. We had Molycorp. Apollo, well, of course, is in a business that will be bankrupt in no time. Maybe another year or two, and that's it. It's off 2.5%. But it's so short that you have to worry about it all the time. The other perpetual shorts that are looking down today, 2%. Sears Holdings. We had the software company we got into yesterday, CHKP, off again today. CHKP, which is Checkpoint Software. This thing has come down on extensive volume yesterday. Looks like it's continuing its move down, probably to that $44 level, which is a gap that's come out here a couple of times. But let's see. Yeah, you've got two gaps up here. So yeah, $44 looks like probably where this thing would like to come back in. It's going to have a little bit of support where it was came into the candle of the 23rd of January, but that's it. Other stocks that continue, or at least on the weaker side out here today, are Garmin, GRMI, GRMN, excuse me, if I can actually type it correctly, GRMN, there we go, Garmin, and this thing looks, probably got into it just a little early, but somewhere around December of 2012, I was saying that this thing was probably going to be making some kind of long-term high. There were too many companies and too many easy chips to buy. When you have a GPS in every phone, does it really mean that you're going to go out and buy additional hardware to carry around with you, especially these bigger phones now that have 5-inch screens, and probably much better software than you would find in Garmin, and things that work well together with it, like Google Earth. Is there really a lot of room left for Garmin outside specialized industries like military and avionics? A lot of that bounce that they had coming in there was selling their products on iPads and other things to pilots and the government, but those heydays are over, and we're pulling back. We'd like a little bit more volume out here, but I suspect this thing's moving back to the $29.23 low that was August 5th of 2011. Now we'll see on the positive side on the NASDAQ 100 what we had out here. Netflix, nice little short squeeze out here today. The pumpers are hard at work on the Bloomberg and CNBC bandwagon. If I can get it here. NFLX, is that right? Yeah, hang on a second. This room in Alex. Am I having continuous errors? Yep. For some reason, my intranet in this room is not working. Hang on just a second. And let's see if we got it now. There we go, finally. Okay. Now, the internet, or Netflix has had this huge, long consolidation round. A lot of people talking about it going higher. I think part of this was a lot of bloviating over the last day or so in Netflix about some interesting figures, but the question is whether or not they can actually get people to start paying out the nose for this. The one thing that hasn't been talked about is the cost of production for their House of Cards and other in-house content, plus what it's going to cost them in 2015 paying Disney for their catalog. And I think when you come to find out this thing's going to have a nice run, we're probably going to find the CEO long gone with a very high sales prices for internal sales on a stock, and then you're going to find out Icon's gone too, and then this thing's going to probably fall back down to the $50 level, which is just too many people can do this. It's too hard to get. I know that they want to be a monopoly for content. Just too many other cable companies out there that control the internet before they get to the door, and I think it's wildly overpriced at the moment, but it's not probably going to back down until we find the giant operator, Carl Icahn, getting out of this stock. But it is up today on a little bit better volume out here. I'm looking for it to come back into this long-term gap that's been out here at $200, and I think what we're going to find is that's going to bounce off to that huge gap down that happened on massive volume on the 15th of 2011. If you remember, this is when they started talking about making their changes from DVDs and splitting the service from the DVD service to the online service, and they royally messed this up. And came down on 22 million shares, whatever, and we're not up anywhere close to that, but pretty much filling that gap. But I think we're probably going to see $200 on this before this thing reverses out, and it could be as much as just a momentary blip, 200, 210, run all the shorts, because a lot of times you'll collect shorts in these markets that move sideways here, thinking this thing's going to turn sideways. You can give me a call at 877-927-6648. That's 877-927-6648. And we'll talk about your particular stock. STX, another one up strongly today, up 3.5%. This one is also another one of these that gapped down very hard. It kind of did a little turtle, a little prairie dogging out here today back into this gap where it came down on high volume. That was on the 29th of January. I'm pretty sure that was the earnings date. Kind of gotten back into that but that day down was on almost 17 million shares. We got into it with about 7 million shares here today, so let's figure we end up with 10 million shares. Still almost or close to 50% volume change as we got back up there, and a move back down underneath it. We've found resistance, and it's at that $38 level, pretty much $38 round level there. So we'll have to watch how this actually works out. I suspect that these companies are going to have more and more problems keeping their profit margins up. And if you follow the show, we talked about the hurricane, they call it a hurricane? Typhoon that came in and hit the Malaysian coast and wiped out the disk drive production. There has always been a problem with oversupply in hard drives over the last 10 years. And that suddenly gave hard drives a little bit of a price bounce, and we're still kind of enjoying that honeymoon on lower supply. But Seagate Technology, Western Digital, both these companies probably going to find that the margins do not last that long. We've always WDC, if I can type correctly, Western Digital. Western Digital not looking that much different today than that, but these technology companies, and these are rare, really pushing these long-term highs out here, but Western Digital not looking that much different today. Dollar Tree, a lot of people out here pushing Dollar Tree again on the CNBC Bloomberg circuit today, and we are getting pretty close back to the previous high in Dollar Tree, DLTR. I suspect we're going to see this September 20th, 2012 high, $49.57, 5.1 million shares tested. So what do we got? About $1 to get there? A little less than $1. And, we're having a kind of a light volume push back into it. This thing did come down on heavy volume on earnings on the 11th of October last year. That came down at about 16.2 million shares. We're just getting over that candle now, but everybody that bought back in there that held probably natural sellers at this level, and probably going to be tough to get through. You'd like to see a little bit more energy back in here, and this thing would probably be one of my guesses as a good short candidate if we can get back up there and all the volume evaporates back up at the highs. I wanted to get into the Apple parts manufacturers just to see how they're doing. We talked about ARMS Holdings. I wanted to look at Avago and some of these other ones. We've seen these things kind of get back into the previous highs a bit. Volume, kind of interesting. Avago Technologies, of course, makes a chip maker for the iPhone 5 and some of the other ones. This is a great candle formation, and I might as well bring it up while we're talking about it. It is normally called dark cloud cover. That is when you have a bullish candle, in the case of the one on March 14th, and it gets eaten by a larger bearish candle the next day. Sometimes they call these tuning forks or railroad tracks. These, railroad tracks are basically when these get a little bit longer. Kind of a narrow, but what you've had is about 1, 2, 3, 4, 5, 6 days of dojis, and what I'm looking for in this is some kind of big move out of this in the next couple of days. Normally you only get 4 or 5 of those like that and you get it. The other ones, Micron Technology's been running like a rocket. Earnings came out 3 days ago or 2 days ago. Massive volume breakout. But has not been able to continue that, and actually we've got a little doji out here. This thing looks like it's probably ready to pull back. It is in a commodity business. They bought out part of their competitors, but one of the competitors actually went bankrupt, and they're enjoying a little bit of margin improvement for the same reasons that scarcity causes a little bit of demand or price appreciation, and they've been a tough business to be in, but for a while they're getting a little bit better prices. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
As we come back, you still have plenty of time, about 4 or 5 minutes here, to call Denny Terrio, our producer, ask him why he's dressed like a guy from an 80s dance show, and maybe even pose a question to me at 877-927-6648. And ask him why he's not wearing his silly golf hat today, too. What else do we have going on in the market? Blistering low volume. Normally, we come in here with 2.2, 2.4, 2.5 billion shares to start the show on the consolidated tape for the New York Stock Exchange. What do we have? We're we've gone like about 100 million shares since the show started. Just vapor for volume as we, 1560 on the S&P cash. Extremely light volume. I suspect we're probably going to have some kind of push out here to test this high one more time, 1566. Maybe we get that first thing in the morning, then we get a reversal. But normally you don't like to see these super light volume tests of highs in stocks, and when you get an index like this, horrifically lighter volume than what we've had before. In fact, you would have to probably be a blind man not to get this signal if you've ever traded with price and volume. So we're going to be watching this, seeing a little bit of the very tail end of the movement in some other stocks. I wanted to go through a couple more stocks in the at least the tablet phone space out here. Qualcomm was one of them. When we look at this one, not a lot to put in there. The one I wanted to actually point out was OVTI. This is OmniVision Technologies. They make camera and camera lenses for iPhone 5s and a lot of other products out there. This one continues to have a little bit of a problem. Pretty significant gap down. It's working back in its way. I suspect this thing's going down to $10.15, and that's probably a very good test on very light volume at that level. Is probably where I'd be thinking that we might have the next big move out of Apple. Apple, of course, had a nice little pop and tried to get into that 460 area. What are we doing on Apple here today? It's up a little, 461. Could it get back into this gap at 480? It could if we try to break out tomorrow. But I'd be very wary of this until we make appropriate bottoms in the suppliers to Apple. I continue to think this move, let's go ahead on a little shorter time frame here on Apple. I don't like this move so far in Apple. It's had incredibly light volume for what you'd like to see off the bottom. A little bit of a doji yesterday, and do I think we could get back to that 435 level again, and maybe the volume dries up in that 435 area, very light volume, and then maybe we get the next move out here if this market remains bullish. But a lot of these stocks, and Skyworks Solutions, another one, they're down here at these lows. They really need to test their lows one more time, and I'm just seeing so many of these out here like this. I suspect we have maybe one more leg down before Apple could become a buy. So look at a few of these: Skyworks Solution, OVTI, Qualcomm, Avago, AVGO, a lot of these that are pretty much specific to Apple. Some of them look a little better. Avago actually had kind of a false breakout here, about 7 trading days ago. But again, one of these reversal signals, dark cloud cover on the 15th of March out here. And of course, you get those resulting days of a lot of little dojis in a short period of time. You got, what, 3? Very light volume today, too. We're headed for a big move, and I suspect we get it tomorrow. Anyway, catch you tomorrow between 2 and 3. Same bat channel, channel 14 on Tiger TV. Same bat time. See you then.